Welcome to the Sunday paper. Today's 18 August 2024. On Tuesday, we saw PPI, or the Producer Price Index, come in at 2.2%, which was lower than the expected rate of 2.3%. The Producer Price Index measures inflation in the wholesale market, and the lower PPI sparked a massive rally in the overall stock market because lower wholesale prices equate to higher margins for companies. Starbucks also had a massive rally, up over 20% on the day at its peak, on the news that the board fired their CEO and hired Brian Niccol from Chipotle. Home Depot reported sales of $43.2 billion for their second quarter, which was an increase of 0.6% from the second quarter of fiscal year 2023. The company guided down on future earnings expectations, citing the idea that consumers are holding off on major purchases and remodels until after the Federal Reserve starts to cut interest rates. Wednesday was set up to be the big show for the week. After a lower than expected PPI the day before, markets were hoping for a lower than expected CPI, or Consumer Price Index, but what we got was right in line with expectations at 2.9%. Stocks and bond futures oscillated in a very tight range on the news, as nobody knew how to digest the flat report. Afterwards, Walmart reported strong earnings, and after soaring as high as 8% on the day, they closed up 6.5%. One thing that was mentioned was an increase in the number of customers at Walmart that earned over $100,000 a year, which made many question the strength of the middle-class consumer. Mentions of a K-shaped recovery entered the lexicon again, meaning that the economic outlook was good for higher wage earners and getting more negative for lower wage earners. But after the comments from Walmart's CEO, the question is, what constitutes a lower wage earner? We also received news on Wednesday that Mars brand, known for M&Ms along with other candies, is expected to buy out Kellanova, formerly known as Kellogg, for $36 billion. Corporate mergers and acquisitions slowed down after COVID and hadn't returned to their post-COVID levels in recent years, due in part to the higher interest rates imposed by the Fed and investment banks, making it more expensive for companies to borrow money and less advantageous for companies to take on smaller companies that could have high-interest, short-duration debt on their balance sheets. Seeing a large merger between two known brands like this also raised questions about the health of the consumer if Kellogg is willing to sell. Housing starts for July were down 6.8% from the previous month, ending at 1.24 million new homes being built nationwide. This reiterated the earlier news from Home Depot that customers are holding off on major purchases and remodels until after the Federal Reserve starts to cut interest rates. U.S. retail sales went up 1% from last month and 2.55% from this time last year, but the average retail sales growth rate in America is 4.5%. So there's a lot of concern brewing about the health of the American consumer and whether or not we can continue spending at the levels that we are. The Federal Reserve has signaled that they could institute a rate cut in September, and all eyes and ears will be on the Jackson Hole Symposium this upcoming week to see if they double down on that or if the new economic data forces them to change their outlook.